Hello ladies and gentlemen, welcome back to my YouTube channel, and in today's episode we are going to be looking at a very fantastic opportunity that is popping up on USDCAD. And the reason this opportunity is so important is because it provides a long-term direction in where the market could be heading. So you have an opportunity to get in at multiple levels. And of course, I'm going to be looking at it on three fronts. I'm going to be looking at it on technical analysis. I'm going to be looking at the fundamentals, and I'm also going to be looking at the commitment of traders report. So this is a fine opportunity for you to understand how to take these three methods of analysis and blend it together to actually get a single direction in the market. So before we get into it, before I get in and show you the screen, please just like this video, subscribe to the channel, because we bring tons of educational content here, and I'll be more than happy to equally even make a video if you make a suggestion in the comments. So let's dive right into the screen. All right, gentlemen, so looking at USDCAD, it makes the greatest deal of sense for us to trade based on what the market can show us and based on what our eyes can see. So I want you to understand a few things. And one of those things I want you to understand is looking at this side of the market. We took off from here, not very impulsive. Instead, we corrected our way up there, and subsequently we had this big impulse. And since we had this impulse here, we have been in a consolidation on this side of the market. So this has basically been a consolidation. And one thing you want to do in a situation like this is you want to trade with the trend that you're coming from. So this trend is very aggressive, and all of this area here is the corrective structure of this impulse here. This impulse you can see on this side of the market. So you want to really have that at the back of your mind going further into the analysis. So remember, we have a whole impulsive wave. All of this is a correction. Then when we begin to dig right into the structure within, we have this aggressive impulse and all of this correction that we've had in the past. All right, so let us keep that at the back of our minds and continue with the analysis. So I want you to understand that what we have here is that we have a market that has traded right into a range. First of all, we broke through this high, cleared this liquidity. I believe we also cleared this one here. I believe we also took this high. We ran through this high, and then the market traded very aggressively to the downside. And personally, I do not like to trade when we get to lows like this. You have no business being a buyer. Yes, I know the candles are very much red, but you want to buy when things are quite red, and you want to buy when things are quite cheap, rather than when it's now a very big green candle you're going to buy there. No, the idea is to buy when it's red so that it turns into green, and that's exactly what we're going to be looking to do in this case as well. So the market has taken this high, ran through the lows, and of course run through these lows as well. And what we're expecting is to see the market trade higher. So the market failed to break this high here. We have a failed high, and these are the kind of situations I like to look into. So we have a high that did not take this high. So there's a very good chance that this failed high, the market is eventually going to actually fill up this failed high eventually. And of course, we have a lot of room to the upside. Now remember, we are coming from a very aggressive impulse, and we have sort of gone into this correction ever since. So one thing that I'm expecting to do is that I'm expecting the market to, it could be here, it could be here, it could be wherever, but ultimately I'm expecting the market to trade first to here, then to here. That's what I am expecting the market to do. Of course, my expectations don't count in this market. I don't make the markets, but this is what I'm expecting the market to do. So how am I shaping, or how is, apart from the technical side of this market, apart from looking at this technically, what else is informing my decision to actually look at the market the way I am looking at it? Of course, now I've shown you the technical side. We've broken down, we've cleared this liquidity. We're coming from a very aggressive impulse. Don't forget, we're coming from a very aggressive impulse on that side. But even at that, we are equally coming from, this is a very aggressive impulse that has gone into the sideways correction. And on this side of the market, we've pushed higher, cleared all these highs, but then we've traded back to the lows. And this provides a great opportunity to buy the Canadian dollar, to stock up more, and for institutions to be buying at, of course, a very good discount. So this is equally another opportunity to do that. So right here, we have my intended area where I would like to buy, which of course, looking at this on lower time frame, this will be the area where of course I would like to get long and buy, probably hold all the way to these highs here, and whatever happens between here and here remains to be seen. But the idea is to buy here and at least hold all the way to this place. So now, to further buttress the point, we are going to be looking at the commitment of traders report. So looking at the commitment of traders reports, we have right here on the Canadian dollar, we have 20,000 longs against 200,000 shorts on the Canadian dollar. Now, I want you to understand that when we're looking at every single currency pair that is traded on an exchange is paired against the dollar. So whatever we're looking at here, we're looking at that against the dollar. So this is exactly USD-CAD. So, but in the inverse. So it simply means that institutions are holding 200,000 long shorts on the Canadian dollar. Means the Canadian dollar is ultimately going to weaken and fall, as opposed to 20,000 longs. So when you look at the net positioning, we went all the way from 76 minus 76,000. That's why it's in red. I mean, if it's green, it's positive. So we went all the way from minus 76,000 to minus 179,000, meaning that the institutions are heavily short on the Canadian dollar. That is another aspect of it. And of course, on the fundamental side of it, we equally have a situation where the inflation in Canada has fallen down to 2.5%. And given the fact that inflation has fallen down to 2.5%, there is a rate cut being expected in Canada. So of course, they're expecting the Bank of Canada to begin to cut the rates down. And of course, when the rates are down, ultimately that will mean that the currency is of course going to be weak, of course, while the stock market begins to climb. But we are dealing with currencies, and of course, we're going to be looking at things from the direction of the currency. So having all of this, bringing all of this together, we quickly head back to the technical side, and we see that yes, we have every good reason for us to actually be looking at this area for longs. Of course, when we are at these lows, we have no business being sellers. We don't want to sell the lows, we want to buy the lows and sell the highs. So that is exactly why we are positioning ourselves to get long in all of these areas, and of course trade to at least this area. And when the market begins to create an environment for us to get long from, we can get long from here, going further into the trade. So this is exactly what we're going to be looking at on the Canadian dollar. So please, if you want to, this has equally been sent in more detail to our community members here as well. This is the community members, so we've sent them this report. This is the premium community as well, so they get to see everything firsthand. So this is where we share every single trade that we take, and we'll get to share that within the community as well. So if this is something you're interested in, please you can join. Of course, you can join the public Telegram as well. That's very much open as well. But this is where I would like to invite you to subscribe to the channel, give this video a thumbs up so that people can see the great work we're doing here. I mean, we're massively undervalued, I believe, because I mean the views and the subscriber base are nowhere near the match of how good the quality of the content that we produce here is. So we encourage you to subscribe and equally help us get the message out there. All right, so ladies and gentlemen, of course, I wish you good luck and good trading this particular currency pair. And of course, if there's any currency pair you would like me to analyze, please send that in and I'll be more than happy to help. Cheers. So tomorrow, the 24th of August, Saturday, we are going to be having an event. Of course, it's a physical event. And, this is an opportunity to invite you there. Of course, based on the fact that it's been sponsored by Tickmill, it's absolutely free. And then we equally have $200 to give to 3 people, making it $600 in grand prizes. So make sure that you are there. Of course, for those of you who are not in Lagos, you can equally join us online. And in this event, we're going to be looking at business opportunities that you can access from anywhere in the world on the internet. And of course, we're going to be looking at many factors that drive, not just the financial markets, but the economy. Because whether you want to trade or not, whether you're a trader or not, the things that happen in the economy affect you one way or the other. And you need to know how you can prepare and plan yourself in order to be safe in this economy. So please make sure that you are there tomorrow. If you're not there, you can join us online. Of course, you can always sign up wherever you find this video. The link is going to be in the description. So make sure that you sign up, and I will see you there on the inside tomorrow.